My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. If you're so sure the Dow market's going lower, why not sell everything? And that's a question I've been getting constantly ever since I started telling people I really don't care for the market right now, both for the show and, more importantly, for the CNBC Investing Club. I especially hear it on days, well, down days like today. Dow dipping 102 points, S&P declined 0.52%, and the Nasdaq lost 1.21%. See, I heard it on the factory floor last night at Ford. And I can understand the concern. I mean, how the heck can I say I like a bunch of stocks, yet don't want to buy them as they go down? How can I tell you a company's terrific, yet warn you against buying the stock right here, the red hot minute? These are actually very good questions. And that's why tonight I want to explain why I recommend sitting on your hands right now. Even as I understand the compulsion to do something, anything. Sell. Buy. At times like these, when we watch the stocks with so many good companies go down, and some with real velocity. First, given that I've been negative for a couple of weeks, I can tell you that we did sell some stocks for the Travel Trust last week, trimming positions in one of my favorites, Palo Alto, actually all of them, Costco, Lindy, because we thought we were being greedy. In late May and early June, even before we really started to worry about the market, we sold some Lilly, AMD, Meta platforms. We told Investing Club members that bulls make money, bears make money, but hogs, they get slaughtered. I realized when I mentioned that out for us, it's been ages since I've driven home that point. It's okay to be a bull, make a lot of money owning stocks. It's okay to be a bear, make a lot of money shorting stocks. But it's not okay to let your winning positions ride without ever taking anything off the table. Sometimes you have to make a judgment call, and you have to, yes, indeed, bring the register. Now, I know this is tough. It's tough stuff. But the trust had made a great deal of money in these stocks. AMD had been a huge multi-year winner. It's up 92% year-to-date when we started to trim the position. We're up more than 86% on the Costco we sold. We had a nearly 80% gain for some of those Lilly lots. I mean, these are piggish prices, people. It would have been pure greed not to take something off the table. Candidly, though, I don't usually or like looking at my cost bases or the average price you pay for your position. I don't want to be influenced by where a stock came from. I only care about and focus on where it might be going. This discipline, and it is a discipline, keeps me from saying about a stock that I bought, say, that went down and then came back again, Lord, I just got back to even. So let's sell. A common mistake many of you make, because it doesn't really matter where you bought the stock. What matters is how the company's doing and where the stock's going. I don't want that price impacting my judgment in any way if I can avoid it. And that's why I used to white out the cost basis of my stocks when I used to use whiteout. That's when I used to be a hedge fund manager. I used to go down my stocks 3 times a day, and I never went to hear where I bought it from. I've gotten increasingly wary of how far some of these stocks have rallied. The moves were relentless. They've been relentless. At the same time, I felt the decline in the volatility index, also known as the fear gauge, or VIX, was demonstrating a high level of complacency among investors. I also didn't care for the setup, with all these Fed officials running around saying different things this week, often contrary to what Fed Chief Jay Powell might say, including today when he spoke at the House of Representatives or tomorrow when he speaks to the Senate. You tend not to make a lot of money when these Fed heads are running all over the place speaking different points of view. And in a market that's already run up huge, I knew that was bad for business. Told you so many times. When I saw that the setup looked like the market would be weak, and when I checked in with the legendary Larry Williams, who helps the show a great deal, who agreed that we were in a weaker part of a long-term bull market, I figured let's take some profits for the trust. Only after we sold those stocks did I look at how much we've made. And I just intuited it was time to take something off the table. That's the phrase I want you to introduce you to tonight. It's okay to take something off the table after a big run. Something off the table. You don't sell everything unless there's something fundamentally wrong with the company or the entire economy right now, and neither's the case. AMD had just been telling us how it could play a role in the artificial intelligence world. That moved the stock up. Costco just delivered one more great quarter. So nothing's wrong, but I figured that if we took something off the table, if we raised some cash, then we'd be in good shape if the market sells off like I expected it to. That way the trust would have fresh ammo to buy our favorite stocks at new, lower, better levels. Now, we've had 3 days of a sell-off, and I'm no longer feeling piggish because we sold some stock for the trust. I think we're currently in no man's land, though. Not high enough to justify making more sales, but certainly not low enough to justify buying anything, because I want to wait for a better opportunity. And we can wait. No, there's no clock on us. What makes me so sure we aren't low enough yet? Because the market edge oscillator I follow, one we've arranged for a special deal for Investing Club members, is still slightly overbought. And I'm in no hurry to take that newly raised cash off the sidelines until we actually get oversold. I know from consulting with Larry Williams and from talking to Mark Sebastian, our resident VIX expert, that Wall Street seems a tad too complacent right now. I feel it. Maybe you do. Plus, I lack a catalyst for any of the stocks we're looking to buy for the trust. Case in point, the one I most want to buy is GE Healthcare. I like the stock very much. The trust owns it because we understand that there's intense demand for the diagnostic machines. Think MRIs. I know we don't own enough GE Healthcare, though. We want to be bigger. Our position's too small. But you know what? You can't just say, aha, you know what? We should buy some right here, right now, because the market's weak and the stock isn't really running. Let's make the position bigger. That's Bush League thinking. You don't wake up one day and say, let's buy some GE Healthcare. No, you either need a catalyst, something that could happen that's positive, or you need a bigger sell-off that gives you a much better price to buy. And we don't have anything like either right now. Finally, let's look at the elephants in the room, the Magnificent Seven: Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla. These are all market leaders. And that's why we've created the CNBC Magnificent Seven Index to monitor them. Unfortunately, reality is playing out like the movie, because for several days, all but NVIDIA and Tesla have been rolling over. Today was the first day they got to NVIDIA and Tesla. They got to them. The whole team went down. In all my years of trading, I know that you don't just get one day of selling for these kinds of leaders. History says you get a few days of selling. And during that time, there'll be a sense by many people that will come on TV that they're finally done and over. Stick a fork in them. I don't think so, but that's what you'll hear. So if you made some sales, like I told you to do, you don't need to be eager to put that money back to work. You can watch the leaders roll over for a few more days and not just furiously start swinging at every pitch. Right now, you can afford to keep your bat on the shoulder. Maybe lower you can't. Maybe that's when we have to buy. Bottom line, I just told you what we're doing for the trust. Waiting. It's often the hardest thing to do. But many times, the hardest thing to do is also the best way to make a lot of money. Joe in Connecticut. Joe.
Hey, Jim. Booyah from Cromwell, Connecticut.
Fantastic.
Hey, I recently sold Wendy's because of insider selling. What's your thoughts on that?
Geez, I tell you the truth, I kind of like Wendy's. It's got a good yield. It's doing pretty well. I think it's the cheapest of the fast guys. You don't have to buy it back, but I'm very pro Wendy's. David in New York. David.
Hey, Jim. I was on to talk about Sam Adams.
Geez, that's been a tough stock. They've been missing the quarter, and then missing the quarter. Now, maybe this will be the moment when they won't miss the quarter. But next week, Constellation Brands reports. And I think Constellation Brands is a little more interesting. A lot of the analysts like it. But remember, they've also been a beneficiary of some stuff that's involving politics, involving beers. And I'll leave it at that. How about Alyssa in New Hampshire? Alyssa.
Hey, Jim. Booyah.
Booyah, Alyssa.
I have a question regarding Oracle for you.
Ooh, yeah.
So I bought it at 39 several years ago, and I'm wondering, should I continue to hold it, or is it time to cash it in?
We've got cross disciplines going here, Alyssa. On the one hand, I want you to take out your cost basis. That way you can never lose any money. On the other hand, I got to tell you, Oracle on the fundamental basis, I actually been debating whether to put it in the bullpen for the Charitable Trust. That's how good that quarter was. So let's make sure we can't lose any money, but understand Oracle is doing incredibly well. Cross disciplines. Edmund in North Carolina. Edmund.
Good evening, Mr. Cramer, longtime listener and follower.
Excellent.
My question is about Shopify.
Sure.
I have a rather large holding in it, and for the past couple of months, I have been slowly converting into cash in my accounts. Some of the stocks I sold out completely, while with Shop and a few others, I have sold a couple hundred shares at a time, and every time Shop went back up. Now, that doesn't bother me. I think you can make two mistakes, critical mistakes. One is selling too soon. Mm-hmm. One is holding too long.
Right.
Of the two, I'd rather sell too soon.
Well, I think that's right. Now, the problem with Shopify in selling that one is it's doing incredibly well. But you have made good gains. I think you've done the right thing. You've scaled out of some stock. That's exactly what I advised. That's what I'm doing at the top of the show tonight. So I think you've done well, and I thank you for the call. Now, listen, if you're having trouble deciding what to do next in this market, maybe the best thing you can do is wait. Hey, Jay Powell's doing that with the Fed. Now, it might not be easy, but it could make you a lot of money in the long run. Well, Mad Money tonight, Zscaler has seen the stock soar after pre-announcement last month. So what is behind the strength? And can it continue as other smaller enterprise software stocks seem to be starting a big decline? I'm checking with the CEO. Then you called and asked me about Barra Mobility, and I was intrigued by the story, but wasn't too familiar with it. So tonight we invited the CEO to tell us more about the company and where it could be headed. And yesterday on our visit out to the Ford campus in Michigan, we had a chance to speak with the CEO of Team Rubicon to learn more about how this veteran-led humanitarian organization is poised to benefit from a big $5.8 million investment from Ford's philanthropic arm. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.